Hey everyone, Sean Taggy here. I'm going to lay down some clarifying language and explanations of the difference between a joint venture or JV, a syndication, and a REIT or real estate investment trust. So these are all options I've talked with investors on when they're considering investing in real estate. Of course, we have our turnkey properties at Memphis Investment Properties, which could probably be another thing on here. But let's go over kind of these. These are more for larger deals, for big multifamily purchases, kind of where you're pooling more people's money together to make the deal happen, where just one person can't just go and buy the deal themselves. Let's say you need millions of dollars to raise this deal. So a joint venture is basically where you and a few other people, typically not a whole bunch, are joining in to buy a large deal, like a big real estate deal or a commercial building. You know, for our example's sake, let's just call it a big multifamily building. And to do a joint venture is you really just need, it's just get an LLC or something, have an attorney write it up and put out the different percentages and responsibilities of all the people. So when you're doing a joint venture, everyone needs to have kind of an active role in the deal, and all the partners in the deal have full liability if anything goes wrong. So let's say, you know, there's a lawsuit and you didn't have enough insurance. Hopefully you do have enough insurance to cover any lawsuit. That's another topic, but you would be liable above and beyond that and anything like that. So a joint venture is something if you're really active in the deal. If you're passive into it, then you're going to go into a syndication. So a syndication is where you have a general partner. They're kind of the active people, the managers of the deal. They're putting the deal together, executing on the business plan. Then there's passive investors, or just members of the deal, or limited partners, okay? And the limited partners invest in the deal, typically providing most of the capital to make the deal happen. And what's nice about that is it's a little bit more protected. This is regulated by the SEC via the Regulation D, 506B, or C. I have a video on that, and you can understand what that is. It provides a little bit more protections. You have to file it with the SEC. And it just shows a little bit more protections for you as the investors, and as a limited partner, you don't have to take on quite as much liability. It's really the general partners, the GPs, who are taking on more of the liability and getting all the loan qualifications and applying for that and taking on the loan assumptions if there is a recourse loan. So syndication is also just one deal. So these are both just one deal specific. We're going after this exact asset on 123 Apple Street, right? And we're going to do this exact business plan. Okay, so a REIT is basically like a syndication, but just way bigger. So a REIT is a big real estate investment firm. They have lots of deals that they're managing, commercial, could be a mix of different types, industrial, commercial, land development, could be, of course, multifamily, and that's more publicly traded. And for syndications, you typically have to be an accredited investor. This, you can just anyone invest into it, and they're most of the time publicly traded companies out there, kind of like a stock, and you're buying more shares into this. Okay, so that's what a REIT is. It's just much larger and basically just has a big conglomerate of real estate portfolio, and their shares and dividends and everything from that. So those are kind of showing the differences in here. You can actually, and in REITs, you can invest, I think, sometimes as low as $5,000. This can be just deal specific, typically $50,000. This is very deal specific, could be a little bit to quite a bit, just depending on the deal. And this is more kind of just between you and your buddies. This is more of a business professional manner, and this is kind of more on like a, trading on kind of like a stock market type of professionalism. So it's kind of getting bigger as it goes up. So hopefully that helps you understand a little bit between those, just understand a little bit of those terms about a JV, syndication, and a REIT. Thank you so much.